Okay, good afternoon, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there. Just let me know that it is indeed working. Hope everybody's had a fantastic afternoon. Hopefully everybody enjoyed their weekend. We had a good live trading call this morning. Obviously, we're doing pretty well so far this week, which is super awesome. And I'm excited to see where this week takes us as far as the scanner trades go. Um, I had a couple of requests come in, and it's funny, I don't see them here, but uh, I was asked to do a demo on how to actually take the weekly trades with the scanner. So what I want to do today, guys, is I'm going to actually go into an account as if I'm trading in my live account on Sunday night. So I'm going to actually go through the full process of taking the trades from the scanner and showing you what that process looks like, showing you how I manage risk. Because I think there's like a disconnect between like, okay, here's the signals, here's the trades from the COT report data, from the sentiment data and the scanner, and then like actually the application on how to get into the trades. So I'm glad that this trader brought that up. And so I wanted to just do a quick 15, 20-minute demo on the full process from start to finish on what I kind of expect each one of you to be able to do when you're taking these trades each week. Okay, so I think that would be a pretty good webinar, and that should accomplish a lot of things. But before we get started, as always, I need to remind everyone about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So, like I said, what we're gonna do today is I'm gonna pull up the scanner. I'm gonna pull up a demo account, and I'm gonna take these trades as if it's Sunday night during the Tokyo session, and I'm going to take these trades. So let's go through that process. So I'm gonna pretend I'm one of you guys and myself, right? And I'm gonna pull up the scanner. So here's the scanner. Let's refresh this. Okay. So let's just pretend right now. I know it's Monday afternoon, and for those of you watching this in the recording, I don't know what day it is for you or what time you're watching this, but hopefully this is informative and helpful to you. But I want to show you what this process looks like. So when you come to the scanner is just going to look like this. It's just going to have it'll be categorized and filtered by alphabetically by pair, and it'll have, the subsequent signals. Now, the most important section in the scanner is this overall signal column, right? This area right here. Why is this so important? The overall signal is the most important thing in the scanner because this is the compilation of of shift in COT data, long-term COT data, and sentiment data. And so whatever score the market gets across all the different metrics that we look at, it then just says, okay, this is the trade that we should probably take, right? So for example, on this Aussie CAD, it's a neutral signal. This Aussie franc, it's a strong sell right now. This Aussie yen neutral, Aussie Kiwi neutral, right? And so on. So overall is the most important place as far as taking a trade for the week. Okay. So what do we need to do? So you got to filter this right here. You have these filtering capabilities, right? So if I come up here and I filter this by um, overall signal, it's going to bring the strong sells and the strong buys to the top of the column. And this is exactly what we want to see. Okay. Now, this is perfect because these are the signals that we believe in the most for the week. We have a high level of confidence that these signals will, at least many of them or all of them, will be successful if you just take them at the beginning of the week. And then by Friday, you're, hopefully profitable on these trades. We don't have the same level of confidence with the rest of these down here, right? So all of these other signals, there's a few other buys, there's a couple of sells, there's some neutrals in between. We just don't have the same level of confidence with these signals down here. And some of them we just have no confidence because it's just neutral, right? There's just no level of belief in those trades, right? So we just focus on these ones. So once it's filtered, the next step is to manage risk in your trading account. So I have pulled up right here. I have a demo account. This is it has $209,000 in it. This is a um, just this is not real. I'm just showing you, but but it's as if I'm taking them in my live account. Some of you still trade in demo, and that's okay if you're trading in a demo account. Um, I, because the process is the same whether you're trading demo or live. I just since I've already taken the trades for the week in all my live and prop firm accounts and copy traders, I don't need to take these trades again because I've already entered into these trades. But I do want to show you in an account that's, this is a clean slate. There's no trades open here. This is as if I am ready to start my new week. This is what I would do. Okay, this is what I do. Okay. So before I take any trades in the account, what do I need to do? This is the problem with a lot of new traders is they go in and just say, okay, it says strong sell in the Aussie franc. So what most traders do is they see that and they find the Aussie franc in their watch list, they drag it over to their chart, and then they see, okay, these are my trades that I'm taking, right? And so they just come in here and they just um it said strong sell, right? So they're just going to hit the sell button and they're on their way. Well, that's a problem, right? Because you have to manage risk. Trading is not just about knowing which direction the market's probably going to go. We need to be able to go in here and manage the risk and make sure that this is an appropriate trade for the week, right? Anything could happen. There could be news events. We could have, something could happen in the market, and we want to make sure that our account is safe and protected. Obviously, we can't protect against all risk because you have to take on risk to make money, but we do want to make sure that we limit that as much as possible. Right? Okay, so before we jump in here, let's go and pull up what's called the lot size calculator, right? So I like to use this lot size calculator with my FX book. It's also known as a position size calculator. I'm going to put this link in the chat box for those that want it. All you have to do is just go on Google and search position size calculator, my FX book, and it's pretty much the first link. As long as it looks like this, you're in the right place. And there's dozens of other places that have position size calculators. Some people even use the Trade Assistant on MT4. It's an EA you have to purchase. That seems like a really good one. Some people have magic keys, which you can order online and have come to your home. It's a calculator that you can actually plug into your computer, but it's kind of like a miniature keyboard type of thing. Uh, the magic keys, you can look into those if you're interested. But I just use this. This is very simple. And the other reason why I like this is because it's totally free. And they also have most of the currency pairs and CFDs in here as well. So what I do, guys, is now remember, what am I doing, right? So I know that, okay, it's Sunday night. Tokyo market's now in session. It's time to take the trades. I'm sitting at my computer. I'm locked in. I'm going to take a strong sell on the Aussie franc. So what does that look like? Well, we come over here and we go to the position size calculator and we find the Aussie franc. So I'm going to pull this up and search Aussie franc, and you leave it at the default currency at USD, and you're going to put in your account size. Now, this is going to be different for everybody. For some people, your account could be very small. It could be just, $500 or $1,000. For others, if you're trading a bigger prop firm account, it could be, 200,000. It could be 100,000, 50,000. You could be trading, who knows, even $1 million account. It doesn't matter as long as you just put in the account size that you are trading, that's appropriate, right? So for this account, how do I find my account size? Well, it's right here. It says down here, my balance is $209,000. So I'm going to put in $209,000 in my account size. Okay. Now you got to put in your risk ratio. Now, this is something we should talk about. Uh, Definitely talk about. Okay, so your risk ratio depends on a couple of things. So some people just risk, and this is up to you, by the way. So I'm going to walk you through this. I'm going to show you what I do, though, but I'm going to walk you through the different ways you could do this. So, what is the risk ratio? And then let's walk you through it. So, risk ratio percentage here is the amount of money, not the amount of money, it's the percentage of your account that you are risking on this trade. So, if you're saying, oh, well, I'm going to risk 1% of my account, then you would just put in 1%. Now, for other people, they might be like, well, that's a lot of risk. I don't want to risk 1% of my account. That seems like too much. Well, then you can lower that amount to a fraction of a percent, and I'll show you how to do that. Other people are pretty risky, and they're like, 1%, you only live once. Let's risk more, right? Which I don't do, guys. I actually keep my risk well below 1% per trade, especially when I have a lot of trades to take, which this week we do. We have a lot of trades, trade opportunities, and so my risk percentage has actually gone down because I have so many trades I'm taking that I don't need to risk that much per trade, right? Some weeks you might only have like 5 or 6 options. That's not a lot of trades, 5 or 6. That's on the lower end, I would say. And so your risk percentage might go up um, because you need to risk a little bit more to still make a good income for the week. So, like I said, some people will just do a fixed amount. So, if you wanted to risk, I think a lot of people do 0.25%. That's a quarter of 1% per trade. You could just do that simply, or you could just keep it stationed at 1%, whatever you want to do. Now, here's what I do though. What I do is I risk a percentage of my account for the whole basket. So, for me, I risk 3% of my account every week on these weekly trades. That's what I've been doing, 3%. Now you can change this to be more or less. Now, why do I do 3%? I do 3%, and this is just my own. I'm going to walk you through why I believe 3% is good for me, but it may be different. Maybe more is better for you, maybe less is better for you. But I like three because I trade with a lot of prop firms, and so 3% seems to work pretty well because if I have a losing week, I typically don't lose the full 3%. I might lose like 2% if it's a losing week, which obviously you don't want to lose 2% of your account, but that's okay if I lost 2% in a week, because most prop firms will let you lose up to 10% total. And if I lose 2%, I can easily come back from that and still trade like normal the next week. Um, but if I were to risk something like 5 or 6% of my account in one week, and let's say I had a losing week and I lost 4 or 5%, well, that's half of my drawdown that I can lose. And I just lost that all in just like one, you know, I lost that all at once. And it's hard to come back with the same gusto and determination to continue the same way you were trading the week before when the same way just lost you, you know, 3 or 4 or 5%. That's a lot to lose. Um, so I like 3% as my max because if I lose, I don't typically lose the full three, and even if I did, I'd be willing to still come back and trade the same way next week. Um, but I've also done less than that. I've risked less where you just do 1% or 2% risk for the whole week, and it just doesn't seem like you make enough money to make things worthwhile over time. So that's the balance you have to achieve. Then to me, this is actually the hardest thing to do in trading is not necessarily even knowing which way the market's going to go. It's achieving the balance with risk management because, and this is something I feel like a lot of traders don't talk about because so many people are just trying to figure out which way the market's even going to go. But then the next set of challenges is just trying to figure out like, what do I risk? Because all of us want to make the most money possible, right? Most amount of money possible, right? But sometimes you can go past the speed limit, right? And if you go past the speed limit, that usually leads to, blown prop firm accounts, blown up live accounts, right? So we don't want to go past the speed limit. Anyway, so I know that was kind of a longer explanation, but I wanted to explain what I do because I think that's most important. So let me continue with this. So I risk 3%. So what I do is I'll take the total number of trades that I have to take. Now I'm going to exclude oil. I know oil is a strong sell this week, but in a lot of my accounts, I don't have the ability to trade oil. I know some of my prop firm accounts I do, but the account that I'm trading right now with you guys doesn't have the ability to trade oil, so we're going to skip that one. So just know that that's what I'm doing as I go along here. So right here I have the Aussie franc. That's one trade. Let's count these. I've got one, two, three, four, skip oil, then EuroCAD's five, six, seven, eight, nine, 10, 11. I've got 11 trades in the overall signal column on the scanner that are strong buy or strong sell. So I have 11. Now let me pull up a calculator. So if I'm risking 3% of my account, watch this.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code Friend of Steve, that's Friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
3%, I'm just going to put in 3 and divide this by 11. Why 11? Because I have 11 trades that I am taking for the week. And that means I need to risk about 0.27. And I'm just gonna put, well, I mean, I can leave it at 0.27, but you could do 0.25 just to make it an even 1/4%. You see how I risk 1/4% and make that pretty common? It's because often I'm gonna have like 8, 10, or 11 trades to take, and that usually puts me around 1/4% risk per trade. See what we're doing? Anyway, so we can put in 0.27, and that would be my risk. Now let's do another example. Let's say you only had 8 trades you're taking this week, and you wanted to risk 3% of your account. Well, you put in 3 again, and you just divide that by the number of trades you're taking. So we'll say 8 trades, right? Let's say we only had 8 to take. Now you're doing 0.375. Okay, you could round that to 0.38 if you wanted to. And that's the amount of risk percentage you're taking per trade because you only have 8 options. But that still keeps you at a max of 3% risk for the week, right? So this is what I do to manage risk when I'm just trading the bread and butter strategy of the scanner, right? Just the plainest and simplest way to trade the scanner. This is what I do. Just take the number of signal or the amount of risk you're risking, which you have to decide. I can't decide that for you, but I'll give you a suggestion like I just did. So I do 3%, and then you just divide that number by the number of signals you have. Like I said, 11 is what we have this week, and that's 0.27. So now I can go back to my lot size calculator and put in 0.27. Now, by the way, with this one, it's kind of weird. If you just put in 0.27, it actually doesn't put in the decimal. So you have to put in 0.27 to get that decimal to show up. Okay. Now my risk ratio is airtight, exactly the way we want it to to the percentage, guys. This is all professional stuff, exactly the way we want it to be. This is how you stay in business and become profitable and other people, because most people won't go through this process. I'm telling you, 90% of retail traders won't go through this process. They either don't know how, or, and I'll be honest, most traders are just too lazy to not even do this. Okay. Um, but you guys are here. Obviously, you're here. You're trying to better yourself and make sure you trade better. So that's why you're going to get this. Okay, now we got to put in a stop loss. Now, what is a stop loss? Now, we've made this super simple. So when you're just taking a weekly trade at market, I don't necessarily want you guys to go out there and try to figure out some kind of technical stop loss and, some kind of candlestick stop loss, resistance, support thing, nothing like that. All I want you guys to do, and you can change how you want to do this, but what I do is I just use the average daily range, which is right here. It's the very left-hand side of the scanner. This column has the average daily range. So for the Aussie franc, it's 40 pips. So I'm just going to put in 40 pips for my stop loss. And now I'm ready to go, guys. Now, for the trade lots right here, just leave it at 1. It already defaults to 1. Just leave it there. So don't worry about that. Now this is ready to go. Look what I've got. Look at all the fields here. We've got the currency pair we're trading, the currency we're transacting in, which is defaulted to the dollar, account size $209,000, risk ratio is 0.27, exactly, airtight, 40 pips of risk we're taking on this trade. Then we click calculate, and this is going to tell me exactly what I need to do. So this says I need a 1.2 contract so that I can risk $564 per trade. Why $564 per trade? Because that's exactly 0.27% of this account. Just slightly over a 1/4% of this account. Okay, now if my account was a lot smaller, that number would be a lot smaller. This is a little bit of a bigger account, so that's why we're going off of. That's what we're going off of. Let me do another example real quick. We'll come back to this. Let's say you're doing let's say you only have $10,000. Okay, and then you click calculate. Well, now you need a 0.06 contract. See how we did that? When you change these fields up, it's going to ultimately change how much you're risking. Now we're only risking $27 per trade, and this is the lot size right here. So I'm going to go back to 209,000 because that's for this example. And let's go ahead and take this trade. So this is a 1.2 contract, and we know that we're going to sell the Aussie franc. So now let's go over to the account, double check to make sure that you're looking at the Aussie franc in the chart here. If you don't have the Aussie franc pulled up, you can drag over the Aussie franc from the watch list. You just drag and drop. That's all you have to do. Just drag and drop into MT4 like this, and that will get you the currency pair that you're trading. Then what I do, guys, is I'm just going to take a sell at market. So I'm going to hit new order, and it's going to pull up this window. Okay, new order window. And I'm going to put in what lot size in the volume here. 1.2. We literally just figured this out right here. 1.2 is what we need. So now when we come back here, we leave that 1.2. Now I'm not going to put in a take profit or stop loss for now. I'm going to put that in just a moment. So I'm just going to go ahead and take the sell at market. So I'm going to go ahead and hit sell. Okay. Now I've got a sell trade on, but the problem is I don't have any risk management parameters, right? Except for my lot size. So now I got to put in a stop loss. Now, what kind of stop loss do I need? Well, it's exactly what I calculated for, solved for earlier. It's that 40 pips, right? 40 pips, about 40 pips is the average daily range on the Aussie franc. So now I've got to go back to the here. And what I'm going to do is I'm going to drag up, guys. This is a sell, so I'm going to drag up 40 pips. Now, how do I know this is 40 pips? Okay. Right here, this says 35.3 pips. Now, it doesn't say point in MT4. It's kind of dumb, actually. It says 353. That's not 353. That's actually 35 pips, 0.3. Okay, so the first two numbers Like if you have three numbers, that's really just two numbers and a decimal. If you have four numbers, like if I come up to here, if I go higher, here, let's actually go up. If I go higher, now it says 1037. That's not 1037 pips. That's actually 103.7 pips. This number right here. So that says 105.2. That's not 1,000 pips. Okay, so just want to make sure that it's very, very clear that in MT4, it's calculated via um, points, which is a tenth of a pip. So they've added a zero essentially. So right here where it says 104.7, 1047, that's really just 104 pips, 0.7. So since we know we're risking 40 pips, we got to bring this down. That's too far. So 40 pips would put us about right there. That's 404. So that's 40 pips, zero point 0.4. That's close enough. I'm going to leave it right there. Notice also my risk. See how it says I'm risking about 564, $565. If I drop that right there, that's going to match exactly what I solved for right here. $564. Airtight. Airtight, guys. That's what we got to do. Keep our risk management airtight. So when we lose in this account, if we have a losing trade, we want that loss to be exactly, within a few dollars. We want to keep it. We want to keep that pretty tight. Okay. We don't want scattered losses like, oh, I got $1,000 loss over here, a $200 loss over here, and $10,000 loss over here. Can't have that. Has to be airtight. Okay. This is how you do it to the point, right? Right. Okay. So that's one example. Now I probably lost some people along the way. That's okay. We're going to do some more example. We're going to do this again. That's only one trade, right? So, but this is actually ready to go. So let's admire this trade for a moment. So this trade is a trade from the scanner, hand selected from the scanner for the week. Okay. And anyway, I'm not saying, I mean, obviously I have confidence in it, a lot of confidence, but again, even if this trade loses, it's okay because we've gone through the process of managing the risk to make sure everything's exactly the way we want it, right? So we have the exact appropriate lot size on the exact appropriate currency pair and the exact direction we're supposed to go with a stop loss that's very appropriate for that pair. It's a daily range stop loss, which usually is pretty good. We've through our back testing, the average daily range seems to be pretty good for the week. If the market goes against you to hit your stop loss, that usually means that it's an indication that the market's probably not going to go in your direction. Okay. Okay. So that's awesome. That's super awesome, actually. Okay. So let's do another example. Let's go back to the markets here, or let's go back to the scanner. Next trade, Aussie dollar sell. Says strong sell, right? Great. Well, let's go ahead and go through this process. Before we even go to the charts, let's go ahead and change this up on the lot size calculator. So first field is what? Currency pair, right? Let's change the currency pair to Aussie dollar. Then we got US currency I'm transacting in. This is my account size. See, this will go a little faster once it's all inserted, right? $209,000 is my contract. Risk percentage stays the same, right? Because we already figured this out. Again, how do you do that? I just take the amount of risk I'm risking for the week. If I'm allocating 3% of my account for this week, I'm saying 3% divided by 11 trades, that's 0.27. If I'm risking 3% and I have only 6 trades to take, that means I'm risking a half of a percent per trade, right? See, that's what we're doing. But since I have 11 trades to take, I'm risking 0.27. Okay. Now I got to change my stop loss because the stop loss was designed for the Aussie franc. Now I need one that's designed for the Aussie dollar. What is that going to be? Well, let's go over here. What's the average daily range? It's about 61 pips. 61 is the average daily range for the Aussie dollar. So let's put 61 in now. Now we click calculate. Boom, already done. This is saying if you want to risk 0.27 of your account and assuming all these other variables, you will risk, $564. And in order to do that, you need a 0.393 contract. Perfect. Now we're ready. Let's go back to the market now. So now I go pull up the Aussie dollar. Okay, and I have to scoot this over because it doesn't auto update. Again, I'm selling the Aussie dollar and I'm going to click new order and I'm going to change my volume to 0.93 because that's what we just figured out, right? And I can double check if I want to double check. Okay, yep, 0.93. The scanner says to sell. That's what he says. Okay, perfect. Then I'm just going to go ahead and click sell. Okay. Now, again, we're not done. Got to be careful not to just leave the chart here because you don't have a stop loss. I think the easiest way to do this is just to drag up the stop loss afterwards. So you hit that and then you just drag this up. What did we say? It's about 61 pips. So I can see that right here. So that's 60.9. That's close enough. Let's just leave it right there. So that's 60 pips, 0.9. That's essentially 61 pips. And that would be my stop loss for the week. So I'm just leaving that trade, giving the market this much room to navigate. We're not going to let it go further than that, though. Okay. And that's how much risk I'm taking on. And you can actually hover over the stop loss and you can see the details. So it's 609, as you can see there, which is 61 pips essentially. Profit says if I lose on this trade, I'd lose $566.37. You can see that when you hover over the stop loss, it tells you what you're about to lose if that trade actually hits its stop loss. Okay, now another thing, where's the take profit? We don't use one, right? We let our winners run, right? That's why this thing works. Well, one of the reasons why this works is because when things go in our favor, we really let these things go. We milk these opportunities. Last week, we made over 300 pips just on the pound yen. You know, most other traders would just close their trade for 50 pips of profit, 25 pips of profit, and call it a day. Not with this. I get criticized on YouTube probably the most because they're like, you took a trade with a 60 pip stop loss? It's like, yeah, we make 300 pips on the trades we take. It's like, yeah, I mean, what did you expect? I mean, you can't, it's very hard to, I mean, and most of these traders who criticize that have never made 300 pips on a single trade in their life, right? Um, um, a lot of these traders, that's just how it is. And that's okay. It's just a different mindset. They've never come from that, right? So yeah, I mean, when we're working with a lot more pips, and so naturally our lot size is a little bit smaller. Um, we don't need as much leverage because we're working with so many pips. And it's just a different style of trading and it works great. You just have to, subscribe to that because obviously if you're going to risk 60 pips of or 100 pips of loss, then you better be making a lot of pips when you win. Yeah, I mean, I was actually looking at the copy trader. In the last 6 months, the copy trader has made over 2,000 pips of profit. Um, it actually might be getting closer to 3,000 pips of profit is what it's made. And people are like, "Whoa, 3,000 pips of profit." It's like, yeah, I mean, that's the style. I mean, our lot size isn't as big, but that's the style of trading that we subscribe to is, having this much bigger um, profit target, but smaller lot size, right? Okay, so no take profit. So we hold this trade till Friday, right? So that's when you want to close everything is Friday, unless of course we close it early. The only reason why we close it early is if there was a big news event or something like that coming up. Let's do one more example. Before I do that, Rodney says, Steve, if you click on the fifth icon from the right in the toolbar, um, your chart will move to the current candle as, oh, there's a tick in price. Oh, okay. Nice. Let's see, fifth icon from in the toolbar. Um, I'll have to, yeah, oh, it's probably this button right here. Let's see if I do this. Ah, yeah, that's it right there. I think that's what you're talking about. Cool. Nice. All right, let's do one more example, guys. Let me know if you guys have other questions. We'll go ahead and wrap up after I do this last example, but I just wanted to make sure everyone knows how to do this. Okay, so again, we've got this filtered. The next trade, let's do a buy order this time because we've done a bunch of sells. Let's do a buy order. So we've got yeah, let's do this pound CAD buy. Okay, this is a strong buy on the pound CAD. Okay, so now what we got to do is we got to pull up the this is a different let me pull up. Yeah, here we go. Here we go. Perfect. Okay, so let's do the pound CAD buy, this strong buy. So let's go over here to the lot size calculator. Let's change the currency pair. Make sure you do this. I've seen people, and I've done this too, so don't worry, but I've seen people forget to change the currency pair. And that is super important that you do that because not all currency pairs are created equal, and the way they're calculated can be different. So you want to make sure that you do that. Um, this stays the same. Count currency, count size stays the same. Risk ratio stays the same. Stop loss will change though. What's the stop loss for the pound CAD? Well, I use an average daily range, right? So what's the average daily range for the pound CAD? Well, it's about 100 pips. It's 99.9. So we'll just say it's 100 pips. Okay. So now I come over here and I change this to 100 and then I click calculate and that's going to give me my lot size, right? So this is basically saying, assuming the pound CAD on this account with this stop loss and this risk ratio, this is what you're risking per trade, and this is how much your lot size needs to be to accommodate that. Okay, so that's 0.75. So now I'm ready to go. 0.75. So now I go to the charts, and I'm going to pull up the pound CAD, which is right here. I'm going to drag this over and drop into my chart. Here we are, ready to go. And then remember, this is a buy per the scanner. So I'm going to click new order. Here's the new order window. I'm going to change this to, what was it? 0.75, right? Yep, 0.75 was my lot size. That's going to go right here on the new order. 0.75. And I'm just going to click buy. I'm ready to go. So here we go. That trade is in, but again, don't navigate away. Do not forget to do this. You've got to put in a stop loss. So I like to just drag it, and I'm going to drag this down about 100 pips. 100 pips is about 1,000 points. So something like this would be about there. And how can you double check that? Is this the amount of money you're willing to risk? If it's too much, then that's not okay. But I'm willing to risk about $500 on this trade, $560 on this trade. So this is about right there, 100 pips. And you can double check my work, right? If you hover over it, it'll say you're risking $561.67 or 100 pips, which is the same thing as 1,000 points. And then this trade is now ready to go for the week. So I could literally just leave this trade on for the whole week and we are ready to go. That is a week-long trade signal set up from the scanner with a very appropriate lot size and stop loss for this pair. Okay. The only reason why you'd close this are for two reasons. One, if it naturally closes. Sometimes we are wrong, right? If we are wrong, we want this trade to just stop out naturally, which we talked about this morning will typically happen in the first 1 to 2 days if we're wrong. If we're right, we want to let this thing really ride out because this has the potential to make a lot of money. And we want to let that really just go, 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 go. And we'll book half of our profits midweek if we're up a ton. Otherwise, we'll close it out just for the full amount on Friday. So this is how you do it. And you would do this for all 11. Oops, I got the wrong thing pulled up here, guys. Sorry about that. You would do that for all 11 trades. Okay, so from the scanner, you've got 11 opportunities here. I guess 12 if you're trading oil. Okay, but you got 11 Forex pairs opportunities. And then you would just do that. And then you would close Friday at some time. Usually I just do that around the webinar. So 11 a.m. 11 a.m. Eastern on Friday would be good. All right, guys. So that's the demo. I just want to make sure everybody knows how to do that. That's the bread and butter. Obviously, we do this. There's a couple of other ways you can trade with the scanner. We don't have time to do all of that, but I wanted to make sure it's very, very clear. this is what you're doing to take the trades if this is all you're going to do. This is one of the most passive ways I know how to trade that actually works and is very successful, is just taking these top signals per week using a lot size calculator. Again, make sure you're doing that. I told you guys about an example this morning about a guy. He caught wind of one of our signals and he wanted to put it to the test. So he put pretty much his whole account on one trade. Didn't use a lot size calculator and didn't use a stop loss that was appropriate to the pair, and lost on that trade a pretty significant amount. And that you could do that, you could do that same thing with any strategy. So that's why, anybody could somebody could give you a golden goose and you can ruin it, if you don't know how to manage risk, right? And I'm not saying this is a golden goose. I'm just saying this consistency. I don't think there's any such thing as a golden goose in trading. I think there's consistency. I think there's a strategy. I think there's an edge with a lot of different systems, and it's just all about staying consistent to your edge over time. All right, guys. Well, I think this is pretty helpful. I hope it was helpful, and we'll get this posted onto the basic training on the website and also on the calendar, obviously. And you guys will be able to refer back to this if you need help next week in taking these trades. All right, guys. Well, have a fantastic rest of your day, and we'll see you guys in the next call. Thanks for coming.